I, for one, wasn't sure if all the Russia war, how involved America and other G7 countries would get, but it seems like it's picking up, and G7 countries just announced a ban on Russian gold, which is approximately 11% of the annual output of gold. Now we've got oil, we've got Russian gold, we have talks from British military general about mobilizing troops. It's going to get interesting. We're going to break down the significance of G7 countries banning gold, what it has to do for your life, and what type of opportunities that might arise. My guest today is my good friend, Steve Penny. He's the creator of the Silver Chartist newsletter. It's the best free newsletter out there, breaking down gold, silver, mining stocks, commodities, making sense of all the global financial shenanigans. I'm a paying member myself. I highly recommend checking that out. There's a link to the free Silver Chartist newsletter in the description and pinned to the comments right there down below. Give a shout out to our sponsor, Vizsla Silver, one of our favorite silver and gold mining stocks. So thank you, Vizsla Silver, for being our sponsor. And we'd love to hear from you. Let us know what you think about the ban on Russian gold from G7 countries in the comments down below. And Steve, good to see you.
Yeah, Jake, good to connect with you. Always look forward to these conversations.
I thought that was crazy. I was not expecting that. When I saw the first headline that said Russian gold banned from G7 countries, I was like, wow.
Yeah, I was a little surprised to see it myself. But the big takeaway for me, the biggest takeaway anyway, is that what the headlines like this serve to do is highlight the significance and relevance that gold still has in the international monetary system. Gold still matters. And there's a reason that these central banks are accumulating physical gold hand over fist. And like you said, the global gold production is about 3,500 tons per year. Russia produces just over 300 tons. So yeah, around 10, 11, 12% of the global output. But, there's going to be a buyer for that gold, whether those G7 nations buy it or not. You got China, India, and plenty of other countries that are more than willing to buy that gold at a market price.
As the Donald would say, China. That was the first thing that I thought.
Yep.
It's bizarre because you would think this is just going to actually strengthen the other countries. The same exact thing that happens for oil.
Yep.
China buying a hand over fist, India buying hand over fist at huge discounts. It's going to happen with gold. It's going to go somewhere, right? So let's talk about what is the significance of this? What does this mean to you as we've seen this breaking news recently?
Well, like I said, I don't think that headline really is going to affect the price that much, but it does serve to highlight just how important gold is to the system. And, another interesting headline that caught my eye that I think is related is Switzerland reversed their policy on banning imports of Russian gold. So Switzerland is resuming importing. And, Switzerland's a big gold refiner. So Russian gold can make its way to Switzerland, be refined with a Swiss, logo on it, and then still make its way to those G7 countries just through a different channel. So it's almost like what's the point of that? This ban or this sanction. All it does is put a spotlight on gold, and so I'm not sure it's really going to have any kind of effect.
So let's talk about it. What is the point? I see that, and I honestly feel like it is an intentional move to shift the power structure of the world. It seems intentional. You couldn't do anything dumber if you were a G7 country. Like the Biden administration signing on to this is one of the dumbest things I have ever seen. You couldn't think of something dumber. All that gold's going to be bought at a discount. And so let's talk about how it ties into the macro. Because when I say, why would you do that? You've talked a lot about the dollar no longer one day, no longer being the reserve currency of the world, other countries building a new system outside. We've talked about that happening originally with the petrodollar. There seems to be such a move towards this new monetary system. How does that current event tie into your macro view?
Yeah, so I think a lot of people easily dismiss these world leaders, the Davos crowd, these politicians as being stupid. And I tend to think they're less stupid and more evil. This is intentional, not specifically Biden. I mean, I'm not saying he's smart or anything is what I'm trying to say. But, the Davos crowd, these people who craft these policies, who actually write them, I think there's intentionality behind that personally.
This was the dumbest thing I've ever seen, Steve. I'm like, China and Russia and India are going to, in Iran, all these countries are going to get so much gold. The only thing I could think, is this a move towards getting other countries to get more gold before the IMF institutes a new monetary system that's a basket of currencies? I mean, what's the significance here?
Yeah, 2 years ago, 3 years ago, this might have sounded like conspiracy theory. Now it's just conspiracy fact. I mean, I've been tracking this for a long time, just like you have. But it's no secret. It's right out in the open now that there is a push for kind of more globalization. You might call it a one world government. I mean, it's right out there. And what stands in the way of that is, dollar hegemony, the United States, and having freedom around the world. And, so I think there's an intentional agenda to diminish that. And, so headlines like this is just one of many things they're doing that seem intentional to me.
You said a one world government. Did you see that clip yesterday of Biden's? I forget who it was. They asked him how long. What do you say to Americans that are suffering due to, gas prices going even higher and all these things? How long do we have to support this war? And he said, basically indefinitely, because he said, quote, the liberal world order is at stake. Did you hear that?
I think I saw that. Yeah. And he said, well, we may have to endure higher gas.
Thing, Steve.
Yeah. And there's so many weird things happening. It's like there's coordination going on. The things they say, you'll see all the same, like the Build Back Better, that was his campaign slogan. I mean, it was the same slogan of different politicians running around the world. I mean, obviously that is coordinated. I mean, this might be a tangent, but I guess it goes to show, that there's a coordinated effort behind these things, and there's intentionality behind it.
What's the next steps of the coordinated effort? What does this currency reset or global reset look like in the end game?
Well, I mean, all we can do is speculate, but what we can do is go to imf.org. You can go to other websites where they kind of put it out right in the open. Another one is like projectsyndicate.com. That's a publication that a lot of these elites, or whatever you want to call them, how they communicate ideas with each other. And one thing that seems pretty obvious is central bank digital currencies, potentially an electronic SDR, special drawing right, as a kind of a substitute for the dollar, or a viable alternative to the dollar. So that's all coming. It's just that, the timing is very tough, but I'm very confident they've got a plan ready to implement when the time is right. They open up the drawer, pull it out, and implement it. The rules of the game are set to change. The global monetary system typically goes through a big change every 40 to 50 years. 1944, Bretton Woods Agreement. 1971, Nixon took us off the gold standard. So we're due for another one.
We've talked about Russian gold and G7 countries banning it, how that will probably just strengthen the central banks of China, India, Russia, not probably, it will. Who knows? Maybe the IMF and some places are even going to step in and start secretly buying some Russian gold on the discount. So we've talked about that. We've talked about how this moves towards some form of a reset. You said the IMF papers talk about central bank digital currencies, things like that. That's ninth inning, right? But let's go back to the fourth inning, right now. In the fourth inning, here in America, we've got inflation really high and seemingly just going to get higher. Every day they announce another billion they're giving to Ukraine. You've got them now saying basically we're not going to fix gas prices because this is for the liberal world order. So we're going to just keep doing this stuff. And then you've got the stock market, people's 401ks, home equity, all now in question marks. And it's primarily around interest rates and the language that the Fed has been using. What do you make of it, and where does it go from here back in everyday fourth inning?
Well, I like to follow the money. Look at what the smart money is doing, not what they're saying, because they're usually polar opposites. What they're saying, and what they're doing, and specifically to silver and gold right now. Silver is so unloved, and it's down to $20. It dropped below $20 this morning, right to a key support level, by the way. And what we see in the Commitment of Traders report is these bankers positioning themselves for a sustainable rally in precious metals, specifically silver. So what they're saying on the mainstream media and what they're actually doing and how they're positioning themselves are totally different. You can also look at like JP Morgan's silver holdings, and it's gone up on a 45-degree angle for years now. So they're buying hand over fist. So I like to look at what the smart money is doing, and they're buying metals in this environment.
You said that big players are positioning themselves for a move higher, and that the data shows that. How so, and what specifically?
Well, the first one, like I just said, is the Commitment of Traders report. That's the most bullish it's been. The structure of this Commitment of Traders report is the most bullishly postured it's been since 2019, when silver ran from, I think it was around 14 bucks.
I'm an idiot. What's the Commitment of Traders? Let's start there. So tell me, and why is this significant, especially as you're seeing silver move backwards?
Yep. So the bankers are, you can see how it's broken up into multiple categories, but you can see how the four biggest commercial banks are positioned in the futures market for silver. So silver is the only commodity on the planet that they're like always short. They're always short silver. But meanwhile, they're buying physical hand over fist. But their short position right now, short means they're positioned for, price to fall. Well, that short position is tiny now. It's the smallest it's been in years. So that shows that they're positioned for the next rally. And the Commitment of Traders report is the way to see how the banks are positioning with their own money.
Now, let's talk about last move, similar thing, March 2020 or so. Silver does this tank move, and then it basically doubles to 29 or so. Big moves. Junior stocks moved a lot. What was happening in the Commitment of Traders at that time as the move up? Did short position drop like this in other previous times that silver has rallied? Is this a similar occurrence?
Yeah, it looks similar, but in March of 2020, when we had that low, silver dropped down to $12, just a little bit below, if you can believe it, on the futures market. You couldn't get physical that cheap. And then it ran up to 30. But the COT, or Commitment of Traders report now, is actually more bullish than it was in March of 2020, which is saying something. It's not a perfect timing indicator, but it tells you where we are. Are we in the buy zone or are we in the sell zone? And downside risk here in silver is maybe $1 or $2, in my opinion. But upside potential over the intermediate term here is, $40, $50 silver remains, the target over the intermediate term. So you got $1 or $2 of downside risk with $20, $30 of upside potential.
Okay, that's also interesting because we're heading into midterms, right? And people are wondering, is the Fed going to reverse interest rates? When are they going to do it? Obviously, they need to get interest rates closer to 10% to have any dent on inflation. 401ks, housing market, nobody knows what to make of it. We are getting closer to midterms. I've been wondering, I'm like, do they put a little bit more brakes into this thing? And then Labor Day coming right into midterms, they reverse. I'm trying to decipher it. Where do you think that interest rates go from here? And when or if do you think the Fed will reverse course?
So first of all, I think the Fed is going to reverse course. I think that's inevitable. My best guess on timing would be sometime in the fall, maybe October, November-ish. But there's 4 reasons why I think they have to. They're going to reverse course. Number one would be that they support asset prices. They don't want a recession or things to collapse on their watch. So they support the stock market, real estate, all these things, and they do that with their easing programs. So that's number one. Number two is the government runs deficits. I think most people focus on the Fed supporting asset prices, but I think even more important than that is we continually run budget deficits of over $1 trillion a year, and someone has to fund those deficits. Someone has to lend us that money. Well, China is stepping back from lending money to us. Saudi Arabia is stepping back. All these entities are stepping back. Well, who's going to fill that void? And it's going to be the buyer of last resort, the Federal Reserve. And that means more inflation, more currency debasement. And then a third reason is inflation transfers wealth to the top 1 or 2%. And they're the ones who make the policies. They get rich off of these policies. Deflation, works against them. And then the fourth reason would be you can't tax deflation. So if, let's say, we had deflation where prices fell by 10%, that would be like a 10% pay raise for the average American. And that's a 10% pay raise that doesn't get taxed. So they want to be able to tax that, tax your income. So if, inflation runs 10%, everyone gets a pay raise in accordance with that, the tax revenue goes up. So that's just a handful of reasons why it's inevitable they're going to pivot. It's just a matter of when.
That's interesting because also then property taxes, even if, the S&P's down, 24%? A lot of these, a lot of things are down 50, 60, 70%. Mainstream stocks at CNBC was telling everyone to put their money in, and that all directly and indirectly, I guess, contribute. That's a significant tax loss, whether it's capital gains on people end of the year selling, now it's end of the year losses, property taxes. So that's interesting. Can you repeat those 4 one more time, though? Those were great, just to absorb them.
Sure. Yeah. 4 reasons I'm highly confident they're going to pivot is number one, they're there to support asset prices, which are falling. Stocks, bonds, real estate, all of those things. They want to support asset prices. Number 2, they have to fund government deficits. China, Saudi Arabia, all these entities are stepping back from lending money to the U.S. government. Well, the buyer of last resort is going to be the Federal Reserve. Number 3 is inflation transfers wealth to the top 1%. That's them. They benefit from it. They make money from inflation. And then you can't tax deflation. Deflation hurts tax revenues. So they don't want that. Deflation is the enemy of the government. And another reason is inflation eats away the real value of their debt. They call that financial repression. If inflation runs at 10%, the real value of the debt gets cut in half every 7 years. So inflation helps eat away the deficits as well. So that's a 5th reason.
Extra credit. So what do you think, if you were to speculate, would cause them to reverse not only course, but also their language? Is it midterms? Is it just a further drop in the market? Is it whether it's gradual or something, finally there's a panic sell? Is it actually moving in inflation down? Is it a more vague of millions of people screaming and shouting because they were already in hard times and now it got harder? What do you think it is?
Yeah. So where's that max pain point where they pivot? It's hard to say exactly, but I think they want to let some air out of this bubble. I think they're okay to see an orderly decline in stocks, in real estate and things like that. They just don't want it to spiral out of control because then even their policies won't work. That's their biggest thing they're afraid of, is they implement some quantitative easing policy and it doesn't work. And that could happen if things spiral too far. So, if asset prices continue to fall, but they're always reactive, they're never proactive. And they tend to implement these new stimulus programs when people are begging for it. These free market people who say they're free market, they beg for a stimulus when things get really bad. And that way the Fed looks like the heroes when they come in and ride to the rescue. So if we get to a point where they're going to look like heroes on, financial TV, that's when they'll be comfortable reversing course. And we're getting close to that.
Interesting. Then what's next?
Well, so I think that's the next big catalyst for metals. But I also think when they pivot, we're going to see a lot of assets that have been sold off have a strong counter trend rally, to include general equities and maybe even real estate, things like that.
It's going to be like 2020. It's just going to go crazy, huh? But you're saying pivot in metals, or you're saying movement in metals from the pivot. Is that what you just said? I just wanted to make sure I caught that.
Yeah, I think once they begin to hint that they're going to pivot, everything that's been sold off is going to start to reverse, including stocks, real estate, and even the metals and commodities. But at some point, I think commodities are going to decouple because they're just so undervalued. And on a historical ratio basis, commodities, it's been 100 years or so since they've been this undervalued relative to stocks. So they're going to decouple, and things are going to revert to the mean. And so while we might see a counter trend rally or a dead cat bounce, whatever you want to call it, in stocks, I think commodities really have a long runway ahead.
Okay. What's the best ways right now you think that the average person can prepare? How can we prepare? What can we do? What's important to keep an eye on? What are some important things to be doing?
Well, we've talked a lot about other things outside of financial markets, but, specifically with investing, I think the most important thing anyone can do is have a specific plan that's tailored to you, because there's no one size fits all. Just shooting from the hip is probably not going to work out the best for you. So for example, with silver, I've had a plan. If this happens, then I'll do this. If this happens, then I'll do that. And right now, this morning we tapped 1975. My plan was, if we tap that support, I'm going to take a third of my remaining cash, deploy it. And then if we pull back to 1850 or 1850 in silver, that's when I'm going to go all in.
That'd be nice. I always think about when Robert Kiyosaki's I started buying it at $6, and Mike Maloney's $4, I bought it. And then commodity stocks at dirt cheap. And at this point, this has been dragging on so long. I'm rooting now I like a lot more fear before it rebounds in the fall and Fed reverses course. I mean, if we got, even if it was a week of $15 silver or Denison at 60 cents or something like that, that'd be before things rebound. That'd be awesome. So let's talk about that specifically, and how Silver Chartist is looking at everything, what somebody can expect if they sign up to the free newsletter. It's linked down below in the description and pinned to the comments. I'm a paying member, but the free one's awesome too. What's some of the strategies you're looking at, watching, things to be aware of with regards to all that?
Sure. So what the service is, it's a fully transparent over-the-shoulder service with real-time alerts. And basically I give members an over-the-shoulder look at exactly what I'm doing. And the idea isn't that I'm perfect or I get every turn correct, but hopefully seeing what I'm doing in a transparent way helps people to make better decisions on their own. And you can also see some of my mistakes, because like I said, I'm not far from perfect. But as far as strategies, it's important to have one. For me personally, I dollar cost average into physical metal every month. I don't care what the price is. When I'm scaling into mining stocks, I scale in on sharp pullbacks to key support levels. That's my strategy. And then when trading, I take 10% of my account and trade with the goal of monthly cash flow. And with that, I like to trade, patterns, and I typically buy breakouts above resistance. So I've got 3 strategies, and they're very well defined, and it works for me. But that doesn't have to be your exact thing, but it's important to have one.
And you're buying on breakouts above resistance with that 10%, because you said that's for cash flow.
Yes.
So you're buying that if you see a move, and that's your cash flow 10% account.
Yeah, with longer term investing, I'm a contrarian. I like to buy things that are going down, and there's blood in the streets. But when trading, the trend is your friend. You want to buy things that are already moving in your direction, and you capture, that momentum for short periods of time.
Interesting. So people can expect both. You share in trading and then long term.
Yeah, and like I said, the trading is a very small part of the portfolio, but it's nice. And I always use a stop loss when I trade. So that means, if things move against me, I'm out for a very small loss, and that 10% turns to cash automatically because of those stop losses if we see a waterfall decline, and that's becomes a cash buffer to scoop up bargains if we do see $15 silver or something crazy like that.
All right, Steve, anything important that I missed? I want to thank you, everyone listening. Want to appreciate you listening. Be sure to check out the free Silver Chartist newsletter, linked in the description and pinned to the comments. Smash the like button on this video, subscribe, bell notification, all that fun stuff. Steve, anything I'm missing?
No, brother, I think we covered everything. Thanks for having me on.
Steve, we appreciate you very much. And it's going to be fun to watch the turbulence continue. At least it's interesting, right?
Yeah, for sure. We definitely live in interesting times.
All right, everyone. We want to thank you for listening, and be sure to check out some of the other episodes, and we'll see you soon.